Hey, what's going on, everybody? Today we're going to go ahead and break down this trade that made me $1,800 on the NASDAQ. This trade was alerted to my Discord, and I know you're probably sitting here already thinking, this guy's trying to sell me a Discord, trying to sell me a course. And it's actually quite the opposite. It is a free Discord, and we give trades like this all the time, and it's a great community. So if you feel like you want to be a part of it, trading's lonely, trading's hard. Don't need to do it by yourself. You can do it with us. So feel free to join. The link is in the description here, but let's go ahead and dive into the trade here now. So I was looking for longs today off of NASDAQ here, and you're going to see I have this first presented fair value gap marked after we swept some equal lows right there. I was originally trying to get in off of that first presented fair value gap right there, targeting some equal highs, but I realized that we likely aren't going to be able to go all the way down there and get that entry, so I had to settle for a little bit more of a premium entry, but that's okay because the targets were still really solid. You're going to see me switching back and forth between accounts, so it might look a little funky, is because I'm trading with Top Step and I have different sized accounts that I want to have different risks for, so that's why. You're going to see that we went down into that gold line right there. That's the midpoint of that fair value gap and had a really nice reaction away from it. That's exactly what I'm looking for right there. And then I'm going to be targeting some opening range gap levels and an hourly unfilled fair value gap level right there. And what you're going to see me do here now is take some partials, but I have a method where I trail my stop very aggressively with my last contract at my last target, and I either get knocked out right away or it does what you see right here and it keeps on pushing through my target. So it's always a best case scenario and an opportunity to make a little bit or sometimes even a lot of it more money and catch a bigger move at the end of a run right here. So you see me aggressively trailing the stop right here, marking out this order block. I liked the push away from that little fair value gap right there because we hit the upper quadrant. Just slowly and patiently watching this trade go. Just want to see up close, or excuse me, I want to see down close candles act as support. That's why I have that order blocked marked right there. And you see my target all the way up there. That's not at a random level. That is at the opening range gap midpoint. I don't have a lot of markings on this chart right here because this is my top step where I do most of the executions. You're going to see the markings on my trading view. So we're going to head over to trading view right here. We're going to fully break down this trade now. All right, so getting into it right away, I did expect a lot of volatility today, and if you're wondering why or wondering where this big move came from, if you look at the prior 2 days right here on Monday and Friday, you can see that they're both inside days. So Thursday right here printed, and then Friday stayed within that range, and then Monday stayed within that range. So a way that I like to think about it is like a spring, and a bunch of energy built up right here, and finally the move happened and explored in this new week opening gap from last week right here. So when I looked at the charts at New York Open, we were already trading into these levels and we had already moved about 400 points. I was honestly expecting some accumulation and potentially a poor AM session after that, but I liked the volatility right off the rip at open, and I utilized some of the levels right in here. So we'll go down to the lower time frames here and take a closer look at that. So a couple things of major interest right here. That new week opening gap, those levels are going to be marked in red right here. So I want to have all of those quadrants and that opening price and the closing price all on my chart right here because you can see how we utilized that upper quadrant right there at the 25% level, and it was right near that previous week low. So a lot of confluence right here. You're going to see on the lower time frames there's a ton of built up session liquidity right here, and I was mainly looking at this gap right here. One, because look how obvious it is, right? This entire move down, we have some little gaps, little gaps, little gaps, and then this really big open displacement that went through two previous day lows. So that's why it was of significance to me. Again, I want to have those quadrants marked out. And then we can go down to the 15-minute time frame now, get some more detail on why it would want to come up into this gap, because that's really where everything in trading stems from, is narrative, right? Why would we actually want to reach up here? Why wouldn't we just keep on going lower and fill this gap right away at the open, right? So that's what we're going to get into here. So a big part of my trading and my models are utilizing time-based liquidity. So every single day, what I'm doing is I'm marking my previous day high and low, my previous week high and low, and then I'm going down to the hourly to find out what is order flow looking like, and then using the 15-minute time frame to mark out my session liquidity. So that's going to be London high, Asia high, and if it's relevant and near price, I'm looking at like the previous day AM high, even the previous day lunch high or PM high. So all of those levels are super significant to me. I used a little indicator right here to help me just spot those really quickly instead of me having to go through and look for them. So you can see that those all those highs that I was talking about right here, these were session highs, right? So we have London high and pre-market high that was built up liquidity. And I'm going to back it up here real quick just so we can kind of make it a little bit more realistic. Right, this is what I'm seeing pre-open right here. So I'm looking to trade after the 9:30 opening bell. What liquidity is near us, right? What have we done and what have we left? So we've left relative equal lows and relative equal highs that are resting right below an open hourly SIBI right here. So whenever I have session liquidity resting right below, it doesn't even have to be session liquidity. It can be any high or low that's resting below a fair value gap right here on the higher time frame. That acts as like a huge magnet for me and a big draw on liquidity right here. So I was really okay with going either way in the market today. I was just trying to find out what is the next draw on liquidity. I don't need to know the entire daily bias or the entire daily range. I just need to know where price is drawing to next. And at this point right here, we're right in the middle of equal highs and equal lows. So pre-market lows are equal right here, pre-market high and London high are equal right there. And I just want to establish pre-market is for me 7 to 9:30 a.m. So I'm looking at the highest high and the lowest low that was made in between that range. So it's very specific times. That's why it's referred to as time-based liquidity. London high is the highest high made between 2 and 5 a.m. So London session kill zone right there. So these were relatively equal right here, and we're coming up on New York Open. So we're going to go down to the lower time frame right here and really start picking this apart. So now we're on the 1 minute time frame here. This is where we're going to see a lot of our data, and it's going to be a lot more clear of that session liquidity that we're looking at. So you can see those pre-market equal lows perfectly right there, pre-market equal high and London high right there. So you can see that we're trading right into those quadrant levels within the new week opening gap. We had swept previous week low right here, right? And so really we're just waiting for open. At open, I'm immediately marking my opening range gap levels. So opening range gap is going to be when you go to your real-time trading hours right here. I'm looking at the gap from previous day settlement to 9:30 open, and I'm marking those levels, right? So I already have these levels marked, and then I take my quadrant levels, which are going to be these blue ones right here, and I'm marking the upper, lower, and middle right there, because the high probability fair value gaps are going to form within those levels. Okay, so I'm going to go ahead and put the opening and closing price on the screen there as well. So I am really, those levels are extremely important to me, right? And so what I have to work with as far as algorithmic levels are those, like the new week opening gap and the opening range gap um, quadrants, because where are we trading at right now? Right around near them. So I need to use those within my bias if I want to target anything specific, right? Next thing I'm looking at is that first fair value gap that gets made within the session, and if it's going to favor what I'm looking for. Okay, so we can see that these equal pre-market lows get stabbed right here. This is that first presented fair value gap, so I'm immediately marking that out, and that is what you saw um, within the video in my top step chart. That was that gray box that was marked right there. So if I'm bullish, right, because what have we done at New York Open? We opened and tanked below pre-market low. So we have taken out a form of important time-based session liquidity. So that's significant to me because I'm always combining, and what I'm looking for at New York Open is a Judas swing or manipulation swing away from some obvious form of liquidity. So what's the obvious form of liquidity? Buy side up here at these relative equal highs. What have we done right at open? Dropped lower. Where? To take pre-market low. And now what are we trading into is that new week opening gap upper quadrant level right there. And you're going to see, look at the reaction off of those bodies or off of the level right there. The bodies are respecting it. So whenever before this happens, I'm not 100% sure. Of course, I'm never 100% sure, but I don't have full confidence that we are going to go up and take these yet. I'm still thinking it might be poor price action because we've had a 400-point move overnight. But once I start seeing this signature in price, where yes, we have obvious liquidity, we have that 930 Judas swing, we have taken session liquidity, and now I see algorithmic signatures of bullishness right here of the bodies closing right on that level. That's a good sign for me. And look at the displacement away from that. But I'm not ready to take anything yet because we're still trading and we just met into this first presented fair value gap right here. Look at the midpoint of that fair value gap. It is perfectly in line with the new week opening gap high right there. So I immediately told the Discord this is going to be an important level. So we can fast forward here a little bit. I'm still just waiting to see what price action wants to do. We respect that midpoint right there. Go right back down to this last down close candle. I'm using this one and not these two because the body of the closure on this one goes below this and it respected that upper quadrant. So this to me is that real order block right there. So I'm not taking an entry off of that. That's a very high risk entry for me in my model. I'm just looking to see, are we going to start respecting bullish order flow and bullish PD arrays? Because what do you think we're going to do if we can respect this, trade above this high, trade above this inversion fair value gap? Well, we're probably going to head towards these, right? So that was my thinking right there. I also have this high marked out. It is your initial high. So anytime we open and create that initial high and initial low, I want to mark it out because they are probably going to use that as significant levels. This displacement, once I saw this, I was thinking, okay, we are probably going to get higher now. I want to take out my risk tool. I want to find out my positioning. I want to find out how much I'm risking. This is where, or not how much I'm risking, but where my stop loss is going to be. This is where I'm going to, this is where I'm really about to enter the trade and preparing to enter the trade. Big displacement through. So you might be thinking, oh, we already took that initial high, the trade's invalidated. To me, no. To me, that's just a market structure shift, right? Because we still have all of this buy side engineered right here. And this was the last high that was made prior to the stab of these lows. So really, it's just like your 2022 model. Low, high, lower low, displacement through that high after sweeping liquidity, fair value gap right here. So you could see that in the video prior, I had my initial buy order right here at the inversion fair value gap, or first presented fair value gap. The reason I changed it is because look at this level right here. Remember, you can't forget about those quadrant levels, right? This is your opening range gap quadrant level right here. After this candle's made, what do we have now? A fair value gap going right through that quadrant level. So once I see that, that is a high probability fair value gap to me. If that's a high probability fair value gap and I'm bullish and we have relative equal highs right here, am I going to expect price to go all the way down here? No, I don't want it to. That's going to tell me that we're not as bullish as I think we are, right? The best thing is since this opening range gap um, level right here is right within the midpoint of that sit or that BISI, I don't want to see price really go below the midpoint here because with fair value gaps already, you don't want to see them go below the midpoint. But look how the opening range gap level is above the midpoint of that fair value gap. So I really don't want to see us go down all the way to this first presented fair value gap because that would mean that we're going all the way to the lower portion and fill this BISI right here. And I really don't want to see us come down here. I want to see this act as a breakaway gap because this is below the first presented fair value gap. So if we were to come all the way down here, I would really think that bullishness is not going to hold up. So that's why you saw my stop loss be right around in this area. I was accounting for a potential wick since we're in some crazy volatility recently. Um, but yeah, that is why my stop loss was right around here. So my entry was off of that fair value gap. That was the framework behind the trade. I'm now in the trade, right? See some nice movement away from it. I wanted to see this act as an order block, but we ended up sweeping this low one more time. And then where do we go? Right to the midpoint of that fair value gap and right on top of that 930 opening price or that lower quadrant opening range gap level. Okay, so that was a really nice reaction. So if we're talking about bullish signatures and algorithmic signatures, look at the bodies respecting the lower or the upper quadrant of the new week opening gap in the midpoint of this fair value gap and of this opening range gap. This tells me that we're probably going to have a nice move higher. So once we had this displacement away, I was very confident that my targets were going to get hit. Um, I had to target past London high and pre-market high because it um, I needed better risk to reward, right? So my stop loss was right around here. If I targeted these, it's only like a 1-to-1. I'm not really trying to do a 1-to-1. I want something better than that. What is my next algorithmic level? Is that lower quadrant of the opening range gap, so that 25% level. What's it inside of? That 1 hour SIBI, right? So I can target this up here. All of a sudden, I'm working with a 1.75, so that's something that I can definitely get down with, and that is what I was targeting. Um, Nice low resistance run to that level right there. So pretty much immediately made that money in about 6 minutes. And then that was on my 450K accounts. And then I still had my 150K account running because I was able to work with more contracts on there. So I used my stop run or my stop loss method of trailing it. So since this is my primary target right here, as soon as that gets hit, I'm taking everything off besides one or two contracts, depending on how many I was working with. I'm taking every single one off, and then I'm taking that stop loss and I'm jamming it right there. Okay, because once we see that movement through, if it's going to be a really bullish move, it's just going to keep on going, kind of like it did right there. Not as significant as, some runs can be, because I've made several more R or risk to reward, in other words, using this method whenever we have really big moves. So it's a method that, if you put it to work, it can really reward you. Here I didn't wasn't able to get too much. I think I trailed it up to like right here, ended up getting stopped out right there. And it was really nice because it ended up being around the high of the day. So I was very happy with this trade. Everything was very good. Nice algorithmic signatures right there. And yeah, so hopefully this breakdown helped you out. Again, this was alerted in the Discord, so if you want to be a part of a community of, like-minded traders and not be on this journey by yourself, not do things alone, learn together, have someone who's been trading the markets for 5 years now, going on 6 years, kind of help guide you and give you some psychological tips too. A lot of other, really great traders in that um, in that Discord as well. We're here to help you out, so feel free to join. The link is in the description. But other than that, good luck and good trading to you, and talk to you soon.